Hi, this is Dan Collins joining you once again from Traders Expo New York. Joining me is Felix Fry from Options Geek, and Felix has a new take on options education, and in fact he has two new concepts that he's teaching some of his people. Why don't you talk to us about that?
Sure, that's right. Thank you. Thank you for having me. The two new concepts, the first is options, the options margin of safety. The margin of safety is a well-known concept in finance. Warren Buffett is a proponent of the margin of safety. I take an options bent on that subject, and essentially it's very similar. It determines how an option is cheap, which is a question most investors have. The second concept I've developed is called the risk-reward break-even concept. The risk-reward break-even price. Now that's a very important concept because that's going to tell you the expectations given to you by the market, and that's been lacking for a long time. Right now, when you look at an options chain, when you look at the options board, you don't know what the market is expecting. All you see is prices. So each option has some expectations, and I provide that to the risk-reward break-even price.
Okay, and what we know is that, with options methodology, you can price things what they should be, and they could be out of line. Because that's some way people can trade.
That's right.
Whether it's a little bit off what it should be.
Right. So seeing what it should be is also something that people maybe take a little bit too seriously, right? It should be whatever it is, but at the end of the day, it is what it is, right? The price is what it is. And so how do you interpret what that price is really where the opportunity lies, right? At the heart of any trade, whether it's stock or options, is the expectations or the belief that your expectations are different than what the market thinks. That's where the opportunity is. Yeah. And so showing an investor what the market expects gives them a chance to say, I expect differently, so there's opportunity.
And having traders express what their expectations is very important, especially with options, isn't it?
That's right. It's key. If you want to be a successful options trader, you need to have your own expectations, because then that's the only way you can compare that to the market's expectations.
Yeah. And the beauty of options is you can take a very precise position. So, once you have your expectations, you can time it and you can create an options position to match that expectation.
Right. That's correct. That's right. So using options is very specific, but yeah, it always starts with the expectation. Once you have that expectation, you have your idea, and there's edge in that idea. There's also edge in how you use options, right? There's two parts to that story. It's if and when you should use options, and then which option you should use.
Yeah, it's not always where you think the market's going. It's where it's not going, right? There's a lot of different ways to play it.
That's correct.
Felix, thanks for joining us.
Thank you for having me.
This has been Dan Collins, coming to you live from Traders Expo New York.